Welcome to this Stockbox interview with Andrew Bell, the CEO of Red Rock Resources. Hello, Andrew. Thank you for joining us today.
Good morning.
How are you doing?
Well, pretty well. I am busy, but happy.
Oh, good. It's good to be happy. And I see this morning that the company has released an RNS where you've raised £1 million, which is a decent amount of money. But investors generally don't like placings, especially not placings done at a discount. And people will say, this is what all these exploration companies do. They always do that. They just dilute away. What do you say to that?
I say it's a very good point applied to the generality. And as a generalization, it's true. But just as most exploration companies don't prosper, so most mining projects don't make mines. But what you have to do is try and find the ones that do. You have to find the companies that have serious projects. We have a record of having seen things come into production on our watch, whether it's as shareholders in Jupiter, the Chipi mine, or whether it's in Colombia where we brought a gold mine back into operation. And we only look at things that we think can make mines. And, we are a company that has, unlike a lot of exploration companies, we have some revenues. We have some resources that we can call on in a rainy day to prevent us getting into serious trouble. But they can only meet, say, the administration costs or the basic costs of the business. And we have in recent years, when times weren't so good, gone down to more or less those basic costs. We've been waiting to get back the Kenyan licenses in particular, and to get to a point where we could really mobilize and do things in Congo, where we form joint ventures. But it takes time for things to mature, like laying down a wine almost in Congo. We're now at a stage where we can really accelerate these things. We've also, in a country where things move much faster, Australia, been able to assemble a portfolio of properties in the Victoria Goldfields that is extremely high quality. We just got the 43101 on that done, which confirm how high quality it is. So we can go flat out now for a TSX listing for those assets, which is what we're doing. And so we're moving from a stage where we were waiting on events and seeing that our credibility was not really going to be restored until our promises that we were going to get back the Kenyan licenses came true, to a situation where we have these things back. The next question will be from governments and other people, well, are you big enough to explore this? Or are you serious about exploring it? Are you going to try to add value there? And the answer is first of all, we've always been good explorers. And secondly, we have always outperformed commodity bull markets. And in particular, we've massively outperformed gold bull markets. But you can't build without bricks. And the bricks, the ammunition at this point is cash. And the amount we can generate internally or have internally to support our operations will support the basic functions. But if we want to go out and explore, we have to get that money from somewhere. And this is what the sector is about. It's finding times like this and opportunities like this when by spending money, you can add value. Because we have a 1.2 million ounce gold resource there in Kenya, which can be built up. Definitely, it's open in every direction. And there are high-grade zones which we can build out from to improve grade. And there's no reason why it shouldn't be a really substantial high-grade resource like North Mara just to our south, or like the Shanta asset just to our north, where they're now getting very active. We have the assets in Congo, which are high-quality assets, and we're even adding to our position there and improving it as we speak. And that's going to be things that will have a reasonable chance of being brought into production from known resources relatively fast. So we're putting the last elements of that jigsaw in place. And we, of course, have some costs which we have to allow for in the listing. Now, it's quite possible that we'll be able to pre-place do a pre-IPO placing in that new listing vehicle. And it's possible we may sell off one or two non-core assets there, but we have to work on the assumption that we're going to need money there. So we're only raising money, and we're shareholders ourselves. I have a lot of shares. We're only raising money because we think by raising money, we can improve the value of the existing shares.
Okay, and did you say earlier that most of the base costs of the company are covered by revenue that's currently coming into Red Rock?
That's true. It's a mixture of revenue. We have the dividends from our holding in Jupiter Mines, and we have the small royalty income. But in addition, we have, of course, the shareholdings in Jupiter Mines, and now the shareholding and warrant holding in Power Metal Resources, which has done extremely well. Jupiter pays a really high dividend, and Power Metal Resources has shown a good price appreciation. We've quadrupled or more our money, and we expect it to go higher because it's a well-run company with some very good projects.
So that is quite a strong position to be in. It means, I guess, that the money you've raised today can go straight into advancing the assets. And of course, it is investors' hard-earned money that they've put into the company. How do you ensure that it's going to be put to good use and generate a good return for them?
Because we have very specific projects where this money, the huge bulk of it, is clearly going to go. And I think that we'll get a flow of announcements which will make this very clear as we go along. People will be able to see that money being put to use.
Okay, and what would you say to existing shareholders who are maybe feeling a little bit miffed?
Well, it's always the case that in raising money in AIM and not having the expense of a prospectus and so on means you're doing a placing. You have then to be sure that the discount you're doing the placing at is a standard discount, not an excessive discount, and that you're actually going to add value to the holdings of existing shareholders rather than dilute them. And as I say, which side of the equation am I? I'm on the side of the equation of an existing shareholder. So the last thing I want to do is see any needless dilution. Now, when the price had come up so very much, you couldn't expect us to be able to raise at exactly the peak price or the price it is today, because people will see just a few days ago it was below the price you're raising at. And so it's been very volatile. And the market, of course, can go in either direction at the moment. We don't know what's happening with coronavirus, with economies generally, with market conditions. And so when we've just had a very sharp rise, locking in some value by having at a very fair, very reasonable discount a fundraise, which will take away the doubt that was in people's minds. Oh, they're going to raise money. They're going to raise money. Well, now we have raised money. People can see we've raised enough to keep us to meet our needs. And I think people should now be looking forward to all the things that we're going to do and the ways we can build the company using this. Because remember, we have big projects. I mean, 1.2 million ounces gold resource as your starter. That's a big project that would normally require a lot of money spent on it to make any meaningful progress. The assets that we have in Congo, again, these are some of the big company assets. We can't say, well, our capitalization is this, and people don't want to be diluted. Therefore, we're only going to spend $10,000 on them. Clearly, so we have to take a swing at it.
Mm-hmm. Okay, and finally, Andrew, investors will no doubt be hungry to learn more of Red Rock Resources projects and the activities planned, and of course see the results coming in. How eager are you to get out there, get on the ground, get the barbecue fired up and dish out some results?
Well, I'm planning to go back out to Kenya this week, and I will be also renewing my visa for Congo, because it's a complicated business getting a visa. They don't last long. But the place I can go immediately and start doing stuff is Kenya. And Congo, in the meantime, we're working on hard. I have to come back for my son's wedding in mid-October, which I probably shouldn't miss. And then I shall be straight out back there again. So I'm going to be spending most of my time on the ground there from now on. And that's just the way it is. If one doesn't work on the ground to make things happen, the lines of communication become too long. But of course, one of the things we're doing at the moment is we're going to have to add to our staffing on these projects, because just as you don't want to be your own doctor, you don't want to be your own geologist and your own country manager. So we've got to scale up, and we should be as we were when we were last in a situation in the market like this and had the availability of assets like this. We should be a very much larger company, and I think we're going there. And so this is the fuel, the rocket fuel that sends the company up. This placing is the rocket fuel.
Okay, and Australia, a similar approach there as well?
Well, Australia, we've got one of the elements in place with a listing on the TSX, like Fosterville South. It's partly what assets you have and what local exploration expertise you have. We've covered all of those, but it's partly also the Canadian leadership you can bring in and the marketing and PR. Now, I think our partners at Power-Metal Resources are quite familiar with the Canadian market and know the marketing and PR people who did such a fantastic job for Fosterville South. We've now got to put those little extra elements in place to make sure that when we do list, this is a company that's going to attract a lot of attention, a lot of trading. So there's a lot to play for there. And I'm glad that we are sharing that risk and sharing ideas with another highly capable company, the form of Power-Metal Resources.
Okay, well, Andrew Bell, thank you very much for talking to me.
My pleasure.
Thank you for listening to this Stockbox interview. For more information, interviews and videos, visit our website at stockboxmedia.com or give us a follow on Twitter by searching @StockboxMedia.